the name that I continue to buy on dips is Flagstar, FLG. They report tomorrow morning, and I just wanted to sort of highlight the things to look for. The first is, are they profitable? And they started turning profitable in the fourth quarter of last year. They were profitable in the first quarter of this year. I think they'll earn about 4 cents. I think street expectations are probably too high at 6 or 7 cents a share. But, profitable is important because that starts to solidify the idea that book value, which is between 15 and 16, tangible book value, which is between 15 and $16, is real. And this thing still trades at 14 or a discount to tangible book. And I think it can trade back up towards tangible book. By the end of this year, I think it's going to be close to 17. So that's my price target by the end of this year. The second thing, and this is now the incremental story, is the balance sheet starting to grow. So this is a company that was almost failed because of their exposure to commercial real estate. And they've been having to shrink their commercial real estate portfolio dramatically. When you shrink the balance sheet, it's hard to grow net interest income or top line revenues. But this quarter is supposed to be the first quarter where the growth in C&I, corporate and industrial loans, starts to outstrip the shrinkage of CRE or commercial real estate loans. And so you should start to see some growth in the balance sheet. I'm not sure it's going to be net a big growth, but it's the transition period, kind of like the fourth quarter of last year was the transition period to profits after 2 years of losses. And then the last thing I just want to mention is the efficiency. So efficiency ratio. So something like 85 to 90% of their revenues are eaten up by expenses. So it's a bloated expense base because of all the problems they've had. And that's what we want to see, an expense ratio somewhere closer to 55, 60%. So we want to see progress on that efficiency ratio. So those are the three things I would look for. I just remind people, I mentioned this before, they had a slide deck out there from April, which they said they were going to earn 60 to 65 cents this year. That was hogwash. They're never going to earn 60 to 65 cents. So they're probably going to have to revise that downward. And, the stock could sell off as they revise down their earnings expectations. But this is not a story about how much they're earning. It's just a story about, are the key transition or progression metrics moving in the right direction? So Flagstar is the name I like.
So if you didn't own, I asked this to everybody, Charlie, as you know, if you didn't own it, would you buy it here?
Actually, at around 14, I have been buying it.
Okay.
So 14 plus or minus. Every time it dips into that area, I do buy it.
Okay.
But I've been,
and in terms of position sizing, it's like lotto size, or is it a little more substantial?
It's more than my average right now, but I have room to add to it and probably will. Ultimately, I think, this is a Steve Mnuchin, former Treasury Secretary, turnaround situation. And he has a history of doing these things and then selling them off. And that's my ultimate payday is this thing's going to get sold at some premium to tangible book. So if tangible book becomes $17.27 and you get maybe 1.5 to 2 times that, that's kind of where I'm looking for the upside.
Okay. All right. Mr. Mackey, anything else on your mind this morning? I saw you note about Deckers.
Good Deckers. I ate there tonight. That stock has been kind of 100-ish for a long time. I'm not sure they say anything tonight that's going to break them out. These consumer companies, the problem they have is that they can come out and tell you everything's fine, but what they can't argue with is the sort of if-then kind of wealth effect trade problems, or whether how's the Strait of Hormuz doing if they are dumb enough to have exposure on that. They can't tell you what gas prices are going to be. And so I think Deckers will be fine. The worries that Nike's going to come and just boot stomp everyone because they're revitalized are proving unfounded, to be polite. Deckers will be fine. I don't think it's going anywhere particularly fast. We'll see. It's the other problem with these sell-offs is it can be run from all these tech companies that starts it, but correlation just starts needling up to about 1 as you go throughout the day. So, am I going to hide in Target? Well, that's probably not the best hiding place on earth right now.
Yeah, they just take all the risks down.